All right, so one trade today. I'm just gonna stay in that 5 minute for now. Just we can kind of accomplish everything that needs to be said there. So we take a look. We had these equal lows. One moment. So this is the 5 minute chart. We're on bar replay mode, but this is yesterday. This is Asia yesterday. So we left these two lows, and in Asia last night, we swept this liquidity and saw a crazy move through Asia. Following that, we mostly just saw consolidation during London. And during this consolidation, we did leave 1, 2, and 3. Well, two equal lows here with this liquidity here. So while structure was bullish, we are in a macro downtrend. There's no avoiding that. And really what I was looking at was this purple line here with the 4 and the D on it. The 4 indicates it's the constant encroachment of a 4-hour fair value gap and a daily fair value gap. So either I was going to continue and ride the bullish trend was kind of my bias going into today. In order to do that, I really wanted to see on open, I wanted to see price come down into any of these areas, take this liquidity, and then continue on higher. But on the other side, today if we saw price open up, come up to, I had this yellow circle drawn in prior to market opening. If we did come up this direction, we would be hyper overextended, taking out previous day's high, coming into a major zone of liquidity. I just wanted to see how price reacted when we got up to that zone. So let's take a look at how price played out. So on open, we get a violent move to the upside. So this is the 9:45 candle close. So typically I'm entering the market. I'm getting on my screen around this time. So here we have a 15-minute fair value gap we created. Our 5-minute fair value gap. That was also a 15-minute fair value gap. And it looks like at this point here, I was looking for retraces down into this zone and then to play up into this zone of liquidity, but it never came. And where we are here, we started to see price slow down quite a lot. Right now it's we're coming up to 10:30. So around this time period, typically if I see this happening, so if we do have, as we saw, a major move during Asia, consolidation, and it looks like we're starting to make a move here, but we are very overextended. And as you can see here, price just starts to slow, and we are kind of getting to around 10:30. So I'm kind of at this point, typically I will just chill and wait kind of for the hourly closure around 11, unless we get something before then that indicates a move might be happening. So this was kind of the point where it happened here. So as you can see, these candles are kind of lethargic. They're having a real effort getting up to this zone. And if we actually look at NQ right here in the corner, right here we form an SMT. So NQ comes up to a similar level, we form an SMT. So at this point in time, I'm starting to get interested in a trade. Really what interests me a lot is on open, we created these equal lows down here. I really need to see confirmation because I am somewhat counter trend trading. Higher time frame is extremely negative, and we did take out a key objective on the higher time frame, but on the lower time frame we're still quite bullish. So I really need to see a lot of confirmation. For me, it would be a closure through this 5-minute fair value gap with a little bit of momentum. And this was enough for me. At this point in time, I was pretty convicted that we will come down to this 450 area. So I entered the trade. So this is about my entry here. My stop was above the candle formation and above this fair value gap. And my take profit was down just at these two equal lows. And bang, we got right to it. And yeah, it was like a 1.1 trade, which is great because that was a full-size day for me. And if we look at what happened after this, as I said, like I think a lot of traders only took partials here only because we had a ton of liquidity down here that needs to be mitigated. And as I said, we had these resting lows here. So like that was warranted. The only thing is you really are fighting an intraday bullish trade when you're doing that, which I don't like to do. If I'm ever doing that, I'm just taking my profits and running at a minimum 1 to 1 hour, which I got today almost to the point, to the tick. So the rest of the day, it looks like market conditions are really starting to turn, with things in the Middle East looking like they're kind of finding some more certainty there. I'm not really too clued in on geopolitics, but the markets seem to be liking what's happening there. And as you can see here, there was an awesome trade. So we got this like V-shaped recovery here, and like this would have been a great trade to take this TP1 here. This is a very valid trade, and then TP2 up to our next zone. We'll see how it would have played out. Yeah, there you go. That's a monster. I know a lot of traders made a lot of money on that. This is the sort of trade you dream of, to be honest with you. Is you enter, and we just get, in the space of less than 10 minutes, you move. Let me see. Yeah, say in the space of less than 10 minutes, yeah, you're moving almost, how many points is that? Yeah, 45 points. Yeah, it's huge, you know. Now we're sort of, we're consolidating. That's typically what you see, you know. When you have a large violent move, just kind of, it's kind of this, as we saw here, violent move, consolidation, violent move, consolidation. And yeah, hopefully we can just keep it inching our way higher, and maybe we have been at a bottom, because if you actually look at here, this is ES, and I had these levels marked in, as I said here, key level, very bearish if broken. We had this equal low, so we're after taking liquidity from this. Sorry, let me zoom out on this. Might be easier on the weekly actually, oh no, the daily. So we had this large area, this range we were in since October, and we had these somewhat equal lows down here. So really what we were looking to see is, how is the market going to react when we take this liquidity? And as we've seen here, and we had these equal lows also. So we had two sets of equal lows that have now been taken out, and we're about to, looks like today is going to close with an inversion fair value gap. Really what's going to be key is seeing how price does through here. If we can manage to close the week through this fair value gap, we have all of this low resistance liquidity to the upside, and then we also have essentially equal highs up here on both ES and on ES. Yeah, so I would be expecting moves up into this 618 and this 618, and that could happen rapidly. Yeah, so again, it's still early days. Right now we have not broke out of this trend. We need to close through here, and then really this prior monthly high, prior weekly high. If we can get a weekly close through here, I can safely say that like this correction, which it is a correction, we are down almost exactly 10%. So that's like right on correction territory. And you saw this with like sentiments, even on like on Twitter. You know, a lot of the big retail traders, they were all loading up. You know, like the big boys loading up tens and tens of millions into their long-term portfolio at this 10% level. And so the smart money is coming in. There was a lot of great companies on sale over the past week, and people were buying them. You know, because I think people know any positive news on the war situation in the Middle East is going to lead to a rapid repricing when certainty comes into the market. And even just a whisper of that today has the S&P up, yeah, almost 3%, and NQ is up almost 3.5%. That's huge, you know. So yeah, it's all looking like it's about to turn around, and we're continuing to just march higher. So yeah, March was a very, very tough month. This rounds off March. Like, the majority of traders I know did not have a great March. If you did have a great March, you have a very odd strategy that can capitalize, and maybe you're a great range trader. But for the way I like to trade, which is continuations and just seeing follow through on price, it just wasn't there all month. But with that, when you have a period of say 30 days of pure sideways action, that's just like a coil spring. And once we release from that, cleaner price actions ahead of us. That's kind of what I was trying to point out here when we were looking at this. When we were looking at the overall the daily ES chart, is there is plenty of targets to the upside, and we will move their momentum as everyone tries to catch the bottom. A ton of volume comes into the market, and price will start moving to your targets with immediacy. So yeah, I think we should have a few better weeks ahead of us.